So here's that trade on Friday, July 7th, that I ran into issues with and ended up taking a 2% loss on. So here's what I was seeing, and these are all mountain times. So right around here, around 9 a.m. Mountain, 11 Eastern, I noticed that we were in this wedge, right? We were making lower highs and higher lows, okay, since about like an hour before market open. So what I did, I'm going to zoom in here a little bit. It looked like we were kind of slowing down, coming into the top of the trend line here, losing momentum. And so I entered in. It was a little bit early of an entry, to be honest, but I entered in right around here. I would say is like right around there. It's where I bought puts, expecting a small move down, and I had my first take profit target. Profit target was right about here, maybe like right about here. So I was hoping to get one profit target hit, and ideally see it move down below the trend line for further profit targets. But either way, my one profit target would have gotten me to break even or a little bit in the green. So I entered right here on the trend line, and I set my invalidation point right about here, which was just above the high of day to that point. So it was a little bit below that. It's kind of like right there. Okay, so entered right here. Invalidation point was high of day. The problem is that a ton of time went by without me getting stopped out, and as a result, theta burned on my options contract, which means that they're worth less over time because they're expiring at the end of the day. These are the 0 day till expiration. So as time went on, my invalidation point would not ever be hit. I'd be stopped out way before it due to the value of those options going down. And so what I had to do in order to keep this invalidation point was I had to move my stop loss from 19 cents on the option to 14 cents, which increased my risk on the trade. That kept me above this invalidation, or the high of day invalidation point. But looking back on the trade, my problem was that I entered the trade on the trend line. I based my entry off being at the top of the trend line, and so my actual invalidation point should have been a candle close above the trend line, right? If I had done that, I would have been stopped out, I believe right here, for about a $36 loss, which would have been like 0.75 roughly percent loss. So that's where I should have had my invalidation. That's where I should have been stopped out, is right there on that candle close above the trend line. Instead, I ended up getting stopped out actually like right here for a bigger loss. And so that would have been okay to have that as my invalidation point, the high of day. But if I had done that, I would have needed to enter up here near the high of day to reduce my risk. Okay, so really I should have been waiting to enter, like say right here a little after 9:30, and then this would be a valid invalidation point. But since I entered on the trend line, I should have exited or stopped out on a trend line break and not the high of day. That just created too much risk, and that's why I had a bigger than normal percentage-wise loss. So that was a good learning experience for me. I need to really get clear on where the correct invalidation point is. So hopefully that's helpful for you guys, and we'll see you next week.